Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today is Wednesday. We know we had another wild Wednesday in the market. We had an initial rally up this morning in the market, only for things to come down slightly in the afternoon. Now, we're pretty much flat. However, we did see a red day after a nice 2-day rally. But before we get into it, make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. So let's talk about it, right? It's Wednesday. It is Wednesday. We know the markets always do their thing on Wednesday. But aside from that, October should be a pretty good month. We do not have any heavy major catalysts like CPI data or Fed interest rate hikes for this month, right? We don't see that again until November. So that gives us opportunity to focus on other things in the market. However, on Friday this week, I told you all we had something coming on Friday. On Friday, there was unemployment reports. Now, I think that today or earlier in the week, we had jobless reports, which came in showing that the working is still pretty strong, but we have unemployment rate supposed to come in on Friday, so that's still another piece. Now, it's not a super major thing, but it's another piece of the dominoes that could, make the market continue upward. But let's take a look at the markets. So we know today the Dow was down 0.14%, S&P 500 down 0.20%, NASDAQ down 0.25%, and the Russell down 0.74%. And we seeing that VIX pull down a heavy 1.79%. So you know what that means, right? Our fear and greed index should be up right now. And currently we are at a 31 from the 30. Now this is great, you all, because we know we were recently at a 14 a week ago. We are all the way back up to a 31, heading back towards that neutral zone where that means a nice little market rally. So hopefully we reach this neutral zone, maybe even some greed, and you all are making money and taking profits while we're at it. I found the article, and this is not the one. The article like 5 reasons why the stock market suddenly roared back, and I like this one. This is a good read for me, in my opinion. So apparently the research team at DataTrack offered up 5 solid reasons behind this week's buying momentum. Here are those reasons. Treasury Yields. Treasury Yields, we know they had hit an all-time high, meaning that people were playing safe money instead of investing in the stock market. They were selling all their stocks and buying into other things. 2 years are down, so the 2 years are down to 4.10% from 4.32%. That's good. That means people are getting their confidence back. 10 years are at 3.64, well off the September 27th high of 3.96. Thus put a bid under Optum leadership's names in tech such as AMD, Amazon, and Apple. Lower treasury yields have stabilized currency markets. The euro, which had came down heavily, lost a lot of value along with the British pound. Those two currencies lost a lot of value. The euro is almost back to par with the dollar at 0.9983. The British pound has rallied with its V bottom low at September 26 at 107 back to 1.15. So the British pound recovered, which means hopefully our stock market can recover. We know when things happen around the world, we're affected as well. So we got to take those things into account. That's why we actually come in here and do this, right? We're looking at the macroeconomic part of it, not just the charting part of it, right? So I do the technicals in the morning, whereas at night we always come in here and we look at the fundamentals, get the macroeconomic portion of it. So Tuesday's jolts, which is the job reports, suggest U.S. labor markets are seeing their first real signs of cooling. Okay, jobs are actually cooling down. U.S. manufacturing data earlier this week also showed an easing in economic activity and pricing pressure, spurring markets on the hopes the Fed will cool the pace of rate hikes sooner. U.S. Q3 corporate earnings season starts next week, and estimates have come down enough, minus 6.6% since June 30th, that companies should be able to beat street numbers by a few percent. So that means we should see some positive earnings. Be careful with that one in light of recent dreadful financial warnings from FedEx, Nike, and Hasbro. So we know that some of the earnings, they lowered their earnings expectations. So meaning hopefully that we should be able to beat them, right? We lowered this a lot. We already came in low one quarter, and now we're expecting to come in about equal or better. The next Fed meeting is not until November 22nd, which I talked about that, right? I just said we do not have another Fed meeting in the month of October. So markets can focus on earnings rather than monetary policy. Hawkish rhetoric from Fed members last week tanked the market, so less of their musings could bring further short-term relief to markets. So all in all, we got a lot of stuff going on that could potentially give the market a nice boost up until November, when we could potentially get more bad news from the Fed or whatever the case may be. But as of right now, we can focus on just making money on the way up or down, because y'all know, right? If the market's going up, we do calls. If the market's going down, we do puts. We trade based on this market, and today was a good day where you could have made money both ways. So let's look at the 5-day. We're still up, but just looking at today alone, right? Like I said, the market came up, shot up, did its thing, only for it to come back down, and it's only down by about $7. We had beat that at one point, right? We had beat that at the open. We were up, we were happy, fat, dumb, and happy, making money. Then we only for us to come back down at a point, and that happened in pretty much every index today. Look at the Dow. I mean, it looks the exact same as the SPY. The Nasdaq looks the exact same as the SPY. The Russell looks the exact same as the SPY. So each one of our indexes experienced the same thing, and many of our favorite stocks did as well. Okay, so we just got to continue to hang in there and wait for these things. One thing I did want to take a look at the SPY, right? We already know we charted a lot of this. So today being a very flat day, not losing much, right? We lost 88 cents on the SPY right here. Look at it. We hit a nice little bounce down here at the zone, and we're on our way back up. Now looking at the past, right? Looking at the past, it looks like about the same thing. We can see our next point of resistance up here at about the 390.67 point. Now there's always potential at each level before that, each of these red lines, so make sure you take a screenshot, right? Get each of these levels in there. And let me change them green, actually. I'm going to change them green since we already down here, so y'all know, okay, hey, each one of these green lines could potentially be a point of resistance, or if we blow through it, we continue to do our call options. But when we come back down here, if we come back below here, we do puts, more puts. So maybe right here on whatever day this is, September 30th, I'm sorry. Maybe that was our bottom, and this is our point to make money on the way up. So hopefully, though, we come back just like we did here. We come back to here. We hit a nice point at 390. Before we show some resistance, we take a nice pull back, only for us to run all the way back up. So we want to see this market go back bullish, you all. We know we got very close, only for us to get knocked back down in the month of September. So hopefully we can see a nice little rally, and we should see the same in many of our other stocks. If you all like it, just take a look at it and we'll keep going. I'm not sure what all that is from Tesla, but hey, and it looks like Nvidia had the same thing, price moving. Okay, I must have some chart layouts on here that I don't usually have, but just so you all know, make sure you take a nice screenshot. And also one thing to take a look at, I just noticed this at the MACD, we have a crossover on the day. We have a nice little golden cross. That is a sign of positive movement in the market on this stock, on this index at least. So when the gold, if they continue upward, we could see a lot of strength. So that's a positive sign. Look at it here. You see right here, exact same point, right? About the exact same point before we start, and we ran up from there. So pay attention to these things. Hopefully this golden cross is a positive sign for us, and we could see the market rally for at least maybe a few days, few weeks, few months. But that's what I have for you, right? Until then, I thank you all for joining the journey to become wealthy. Make sure you like, subscribe to the channel, hit that notification bell, and I'll see you guys later.